right. Waiting for Ryan. Let's kick off the show. I hope you guys can see the screen with the data. Good morning, all. ECB day, and Ryan's PC got a bit scared of what's to come.
Right, I can hear you now. Can you hear me?
Yeah, we can hear you, Ryan.
Cool, I can hear you.
Okay,
right.
You want to take over then again?
Yeah, let's. I don't know how far you got in, but let's take it from the top if unless you're willing to it.
I've got in as far as saying that your PC is scared about the ECB today.
I think we all are. Anyway, right. Well, good morning, everybody. Apologies for that little blip there. I'm not sure what happened there. Technology for you. Let's hope that doesn't happen in the middle of trading the ECB, eh? Right, let's get my screen up. Boom, boom. There we go. Right, obviously the ECB is going to be the big subject today, so I'm just going to flash over the bits and pieces. First up, just the PBOC, a little gift to go along with that. They fixed the rate last night at 6.9148. This was lower than yesterday's 6.9160. So they are still keeping their BDIs on the market and the weakening one. As we know, we got up near that 7 level, within touching distance of that 7 level yesterday, up to, where do we get? Just above 50, I think. Into the 70s. 6.9970 was the high we got yesterday. Now, I'm not going to say that they intervened or said anything or came out of anything to knock this back. This has been part of the general dollar easing we've seen yesterday. But even so, that is a marked level, if you like. That 7 is going to be maybe a bit of a tough nut to crack. We couldn't try it on 2 attempts yesterday. But them fixing lower than yesterday's fix again is another indication that they're not going to allow things to get excessively out of hand there. The BOC hiked as expected yesterday. No real shock there, of course, but what we were looking for is what is their message on the path for hikes, and it's pretty much unchanged. There's going to be more hikes to come. They're going to keep doing so until they get inflation under control. So again, we're in another situation of how high we might get in hikes before they start slowing, or indeed a terminal rate, much as we've heard from the Fed as well. Now, we've had a few more comments from RBA's low as well, just giving a bit more on their announcement on Tuesday. He said the case for slower pace of hikes grows as the cash rate rises. A bit of a no shit Sherlock comment there. You know, we know they can't keep hiking forever, but we want to hear the signals of when these central banks feel that they're getting to the top. We've already had the RBNZ, as mentioned previously, saying that they think probably a couple more hikes are in the pipe. You know, that's going to be the potential pause in their hike cycle. BOC going to keep carrying on. The RBA going to keep carrying on. He also said that rapid hikes ensure that high inflation is only temporary. I'm going to call bollocks on that, a bit like their rate hike in 2024 call prior. They've got absolutely no clue as to what their hikes will do for inflation. If inflation does come down, it'll be more luck than judgment. But they're conscious of monetary policy lags after rapid hikes. And this is a theme that we keep speaking about. And the Fed have seen it. And we might get something from the ECB today, that they still really haven't seen any strong effects from hikes. And these hikes have been pretty rapid and pretty big. And that's not usual. And it's very difficult to see when the problems come in. It could be like economies slamming into a brick wall if these hikes suddenly bite. When you do hike so fast, you don't get a chance to see the effects of them. So that is something that he's being sensible on, that they're conscious of monetary policy lags after rapid hikes. He sees further rises over the months ahead, but how high and how fast will be guided by the data. So moving into that mode, the same as other central banks too, always guided by the data. Over to the US. Now we had a little bit of a flip-flop here. We had what has been coined by one of our roomies, Five Magics, Timmy Leaks, which is Nick, if I get his name right, Timorous at the WSJ. He was out with a piece saying that there's a strong case for the Fed to go 75s at the September meeting. Expectations really have been flip-flopping between 50 and 75 right now. So he made a point there, and we call him Timmy Leaks because he is potentially being touted as a new insider, giving the heads up for Fed policy. We did have a guy way back in Bernanke's time, Josh, I can't remember his surname now, Josh Weinman or something like that, who used to do the same, pretty much had the ear of Bernanke or someone pretty close to him, and he used to drop some big bombs. So this guy is potentially becoming another Fed insider. I'm a bit dubious whether he's really got the ear of someone, but the market is listening to these stories that are coming out, and they're moving markets. So we need to be aware of that. But the flip-flops come because after that, Fed Brainard came out and wouldn't be drawn on whether she's going to go 50 or 75. She said she's going to wait until the meeting before making her decision. So on one hand, we had this story coming out saying that the Fed might lean towards 75, and then we had one of the main Fed members coming out and saying she's not going to give anything on that, and she'll make the appropriate decision at the time. So we saw a little bit of a move in bonds and dollars between those two stories there, which we'll look at in the pricing in a moment. Now, the other fairly substantial news, well, you could call it substantial depending on your viewpoint. We've had a meeting this morning in Japan with the Ministry of Finance, the FSA, the Bank of Japan, and maybe some other hangers on, I don't know. Now, there's two things behind this meeting. They have these meetings pretty much biannually, although the dates can vary. Sometimes it's April, October, sometimes it's March, October, sometimes it's Feb, September. Round about every 6 months they have these meetings, so they are regular and scheduled. However, this one apparently was called in light of the FX moves. This was given to us by these people at the meeting. Now, what we had out comments wise going into the meeting, they looked like doorstep comments from Matsuno, the CAB secretary, pretty much trotting out the same old lines. There was nothing new there. Then we had the Japan's chief currency diplomat, as they named the title. Now, he largely came out with the same lines, watching things with a sense of urgency, but he did add a couple of key words into his comments. One of them being that they're seeing speculative one-sided moves and excessive excess moves. Now, these are the bits of language we had speculative a couple of months ago coming into the conversation. Then that sort of dropped out a bit over the last few weeks over the summer. That's now back into the language, and we've got excessive in the language as well. That's another step up the rhetoric ladder, if you like. The higher they go, the more strong language they throw in, the closer we potentially get to intervention. Now, they did say they're ready to do whatever it takes in the market, whatever's necessary, take whatever steps are necessary. But another key comment they said is that they're also in communication with other nations, including the US. Now, that can be taken a couple of ways. A, that they're having ongoing conversations with a view of intervening, and they're just tipping the nod to other countries. Or it could be that they're just having a plain conversation as part of normal conversations that they may have. But also, and as discussed yesterday when I asked Kay the question on what sort of intervention or what intervention might look like, we may be able to draw a conclusion that this could lead to a coordinated intervention by the Bank of Japan. And I'll let Kay expand on that in a bit, as he did yesterday. So I wouldn't take it as gospel that that's what's going to happen. It is us speculating on what that communication actually is and actually means. But overall, we have had this step up in language, and as we can see, we are seeing price moves on the back of it. So on that front, before we talk about a few bits in the ECB, Kay, what do you make of those Japan lines this morning?
Yeah, so first of all, they do have regular meetings, as you say, but then today is clearly been called by the rapid moves, which are linked to yesterday's move up to 145. In the way that they talk to each other, we have to know that central banks talk to each other. And especially in times of the pandemic and with all those injections and things, we have clearly heard from Lagarde, from Powell, that they are in touch with the main central banks and they do communicate as frequently as they like or feel necessary. So in that respect, it's not abnormal that the Bank of Japan would be in touch with other central banks. Where the coordination comes in with they are talking to other nations. That means the G20, G7 and G20, because there are rules in the G20 saying rules about manipulation, and then especially the US watchdog is financial watchdog making his list about the manipulating countries. So to intervene, really, they need to have some sort of agreement, or at least explain in details why and how and why the market is not moving in line with fundamentals. And I think yesterday we have seen such kind of move, because compared to the day prior, dollar yen went up like 250 odd points, or at least over 200 pips versus the low, all the while dollar yields were not moving higher, and oil energy was coming off quite sharply. So those are moves which are considered not in line with the fundamentals. Hence, their lines about speculation and excessive are traditionally the last steps before they can make a decision on interventions. But I think they don't want to be seen as manipulators, so they will have to explain it. And then when they say that they are in touch with other nations as well as the US will be the main one, and then probably the EU or ECB will be the other main one in case they would need interventions. The way the dollar moves, unless ECB decides that it's time to talk about the euro now as well, which cannot be completely ruled out, but the way that they look at things right now compared to the rest, I think they would be kind of still on their own to really intervene. They may ask other central banks to intervene in their name. But yeah, we are getting really close, and the talks about being in touch with other nations. We had that one, I think, also in the June meeting, but it's part of a package, right? They need to. It's not an official statement that came out, but all the lines were official enough today. But they need to include in the package. They need to include certain lines because they have to justify it. And my little hunch is when Yellen went to Japan, when was it, in June or July, that the US Treasury side, to me, is already a done thing, that they would have the green light if needed. So things can really be sped up if needed. So what it means for the yen, we've seen the move down to 143.5 below there, seen the jump. because they on the question whether they or how long have the moves to be against fundamentals before they intervene, they did not want to reply, so the market took it as it's maybe not for today. But be a bit careful. It would be something if they would intervene on an ECB day, and when Powell is talking, and then after that intervening if the market would go a bit bananas on the dollar again this afternoon. But if we get back rapidly up to 145 again, I'd say be a bit careful. It may be that they are getting ready to really move into the market, especially. Have a look at those energy prices. Have a look at the dollar yields, because they are going to be really the measure points versus the moves in the end.
Yeah. Now, just something I wanted to bounce off you, mate. You know, this is really, you know, benefit of hindsight and after the event, but just looking things now after having a chance to sleep on it, I'm just wondering if perhaps the dollar moves, you know, from the 140s up to the 145s may be some sort of flow orientated move, maybe some, you know, increased bets on the Fed or something like that. And the reason I say that is just the way it's all evaporated. The dollar bid just evaporated overnight or yesterday afternoon. It disappeared. It wasn't like we saw a crawl down. It just went. Now I know that energy markets have a big say in certain currencies. Obviously, there's some easing for Europe on the gas prices falling, but they've been falling for days. You know, we had the bond yields, as we've shown, they shot up as well, but then they've just fallen out of bed. And it just looks to me like there was some sort of action that took this up here, and it just dried up, which can indicate some sort of flow. Maybe, as I say, traders making some changing bets on the Fed. What do you make of that? I mean, I know it's all after the event stuff, but it can give us a bit of an indication of whether we're going to see it come back in or not.
Well, I don't know whether we have to link all of it together, but it's for sure that yesterday there was a round of profit taking on dollar longs. On the US yields, I think it's rather a fact of less pressure coming from the energy side, the commodity side, that could on the top side that could somewhere alleviate a little bit on the top side pressure of the dollar yields. But then I'm looking at them today, and yeah, we're back like 10-12 BPs lower on the 10 years, but that's not things that we haven't seen before. At some stages, the market is taking profits, is managing their positions, and I think it was perhaps time yesterday with oil coming off as well, and perhaps with the S&P, the stock market's also finding a few beats on the lower end. That it all came together, and then ahead of the ECB, we saw the euro rally through all the crosses. If you look at euro sterling is 100 points higher, euro commodity currencies are quite a bit higher. Euro yen is back at 144. So it's a how shall I say, a few events. We were talking about that in the room the whole day yesterday. The 144.90, 145 in dollar yen was a huge target for a lot of different technical plans as well, and extensions, harmonics, you name it. They were all there in the 144.90 figure, and then a bit of wariness, and then I mean, seeing those US yields coming down a bit, I think it's all a case of taking profits on some of the dollar longs. We also hit a big level on the cable back to the 2020 low, so it's all a bit of a coming together of events and prices yesterday. I wouldn't read too much in the fact that are we seeing something being done about the dollar? I don't know yet. We may get actually a hint, as I was saying earlier. We may actually get a small hint today, if ever. It's still not my base case, because only Villeroy and one other member have been talking about the euro in some euro level in some way. But we may have a hint today at the euro level from the statement and Lagarde. So we have to be very, very mindful of things that happen. We are on big levels, as we've been hammering about. Euro dollar tried a couple of times below 99, so and bounced. So the battle for parity is not lost yet. We are at parity. We saw the 145 in dollar yen. We saw the 114 in the cable. We saw this 67 level on the Aussie. It's all. We are at important levels, and September is going to be an important month, and yeah, things could be on the move.
Yeah.
But
yeah, I agree. And because it is a staff projections day at the ECB as well, they often pick a rate that they use for their financing purposes or their forecasting purposes. So it'd be interesting to see in the details what the staff projectors set their rate as. I think it's for the next 12 months. Could be 6 months, I don't know. So if they start setting that significantly lower, it gives an indication that they think perhaps the low rate is here to stay. But as you say, comments to come from the guard will be important. So before we dip into that in detail, I've just saw something that's a bit of a disparity. I'm not saying this is anything huge, but usually with these things, we can look at Reuters and Bloomberg for the expectations, what it's expected for the data. That's what a lot of the market looks at on their calendars. And there's just a bit of disparity between expectations for the deposit rate. Now, both Bloomberg and Reuters are expecting the main rate at 75 to go 75 BPs, but the Reuters expectations are for 50 pips in the deposit rate, whereas Bloomberg's expectations are for 75 basis points in the deposit rate. Now, as I say, traders and all the big desks they use these calendars to make their judgments. So it potentially can cause a bit of a volatile moment, because those who are watching Bloomberg, if it comes out at 75 pips, that's expected. But those who are watching Reuters, it's larger than expected, and vice versa. If it comes out 50, Reuters have nailed it, Bloomberg haven't. So there may be a case where this disparity, and it's very unusual to see this, particularly on interest rates, such a difference. So it's something just to keep an eye on, at least in the initial reaction. So I just wanted to flag that up, because, as I say, that doesn't happen often, that there's that much of a difference between the two main wires when it comes to rate expectations. So before we get really into prices, or we'll do that alongside it, let's talk about the ECB. Well, sorry, Kate. Firstly, is there any other headlines or bits and pieces you want to talk about before we get into any news items you've seen yourself?
Well, there was some mix and match in the Japanese data overnight. There's some better numbers on I guess it's final now. Quarter-on-quarter GDP. The GDP came in a little higher. The capex was actually a relatively decent surprise, but then against that, we saw the current account, especially the adjusted current account, dip into negative territory, which is pulling the yen to the other side. So we've got a bit of contradicting Japanese data. The Aussie trade balance came in weaker. It's starting to be a bit of a theme, right? Those trade balances being a bit weaker, which still signals that supply issues, supply-demand issues are not out of the way yet. Once those things will start to resolve themselves, hopefully, then we should see trade balances around the globe starting to creep up again. But these numbers, we've seen the Chinese numbers, we've seen the Australian numbers, the Japanese numbers. They are signaling a little bit of of a weakening still of or weaker trade balances a bit around the globe.
Yeah.
I
mean, those Japanese GDP numbers pretty much have confirmed what we've seen throughout the last quarter, that Japan data is turning up. It's looking positive, broadly. We've been keeping an eye on that, whereas other countries are seeing a bit of weakness coming in. Japan seems to be bouncing a bit, whether that's coming out of the lockdown restrictions and the bounces other countries have seen. I don't know, but it's looking positive at the moment for Japan. They could become one of the cleaner dirty shirts, but you wouldn't know it looking at the yen right now. But anyway, let's get into the ECB, and I'll quickly give you my thoughts. As much as I've been saying it, there obviously will be a reaction to whether the hike is 75 or 50 BPs. As much as I've been saying that it's the path and how high they might go that's really important, there obviously will be a reaction. So my view is that it's 50-50. We go either way. I think they should go 75. I think they're justified to go 75. I think the market is probably leaning 75. We have had economists out polled by Reuters, and it's been roughly 50, or half of those polled think it's going to be 75. But I think that the general market is perhaps leaning towards 75. So 50, if they go only 50, that's going to be a big price move there. But consequently, if they go 75, that's when it becomes all about the message. What are they going to do next? Are they going to get into a hike cycle of large hikes? Another 75 on the cards? Will it only be 50? What are they going to do moving forward? And what is their indications for how high rates may go, or how long they may hike for? Now, with the ECB, it's pretty hard based on history to think that they're going to give us a Fed-style hawkish outcome. They may say, right, we've hiked 75, we're prepared to do the same again, but it's not a foregone conclusion. We could go either way, data dependent, the whole lot. They can go a hell of a long way to make it sound unhawkish. And that, I think, will be the secondary risk after we get the announcement. And again, that's potentially going to see the euro sold off if they do that. Now, obviously, if they confound us all and go like the Fed and go super hawkish, then we could see the euro fly. My only issue with that is that we may get the ECB turning hawkish, but it doesn't change the fundamental picture. It doesn't change what's going on with energy. It doesn't change what's going on with the economic data. It doesn't change what's going on in the Ukraine. And I think those worries are going to weigh more on the euro than even a super hawkish ECB. But as traders, we can speculate and we can talk about it, but it really only comes down to what does the price do. And as usual, how I look at it is, if the price is going to move, what has it got to do to change the trend? What has it got to do to kick itself out of what's been happening recently? We know the key levels. It's 99 on the downside. We're here at parity, so the big level above is that 103, 40, 60 area. If whatever happens at the ECB, we can't break out of that range, then we know we're going to be stuck in that range. But if the market thinks that it's something important, i.e. really dovish, then I expect us to be down at that 99 once again, and maybe this time we break it and we see another leg lower. Conversely, if we are hawkish, we could get a run up at least to 101, maybe a bit higher, but it's going to have to break the big levels. If it can't break the big levels, then I think the sellers are going to come piling in again based on the fundamental outlook for the ECB. So for me in trading it, I'm wait for the details, assess the details in my own way, decide whether it's going to be hawkish, unhawkish, dovish, whatever. And then I look to match that off with what the price does. And the levels become key for me. And I'll pick the bigger, stronger ones. And those will be the ones that I'll make my judgments on. What do you reckon, Kate? And have your little say on the euro now.
So I think, and the market is pricing it in as well. We've gradually moved from 25 to 75 BPs. I think they can't do anything else than 75 BPs, in my opinion, to put their money where the hawk's mouth is. We've only seen a couple of them, half those come out, driving the euro dollar back down to 99, where 5 or 6 hawks had all the difficulties to put it to 101 from parity. So that shows the mood in the market still, in my opinion. So the possibility is for a 70 neutral or dovish 75 BP hike, in my opinion, because I don't know whether Lagarde will manage to really give up all the dovishness and start to go hawkish. If she does, then I think we might see a pretty big bounce in the euro, or we could get a hawkish 50 BPs. That could be the case as well, where they go like 50s now, and then we expect to go in the same way or bigger later. That would be a hawkish 50 BP, and depending on, but the 50 BP now, I think will still be seen as being well behind the curve by the ECB, and the market won't like it. So if they give us anything else than 75 BPs right now, I think it's already good enough for the market to try to sell euros again. There's a couple of subtleties which are possible in this decision, right? So as you were rightly saying, pointing out the couple of things, and then I would add, are they going to say anything about, yeah, we are going to let APP completely run off, because for the moment they are still reinvesting the proceedings of it. They could come out saying that, yeah, right, it's enough for now. We don't need it anymore. We are going to let it run off, without even talking about QT. It would be a bit of a change. And then to me, the big question, and again, it's not my base case, because only a very few members have really been talking about the euro level. It has been taken up in the prior statements as saying that they are watching it for the impact that it has on inflation. They could go a bit louder about the FX rate, and that would be, in my opinion, the few percentages that would add to a hawkish surprise. And which could put the euro a bit higher. And I think the market is really trading it right now, the uncertainty. So we are going into the meeting back at parity, which was, we were kind of half expecting it might do. But as you say, then it's all about ranges. Do we break sub 99 or back? I think the first level to really look at is the 100.75, 101, 10.20, right? That's going to be a signal whether we have a chance to get back up to 103.5. But if in turn the market gets really disappointed with the rest of the weight still hanging around euro's neck, I wouldn't. If it starts really to go down, I'm not going to buy any euros, because it could get a bit ugly. And especially, we're talking about the ECB, but don't forget that Powell is talking right in the middle of ECB's Lagarde's press conference, right?
Yeah.
There could be a double whammy coming, or heavy saloon doors and whipsawing markets, where it will be a case of being very, very careful with what we do.
Yeah, Powell speaking at the Cato Institute's 40th annual monetary conference, and he's speaking on the state of policy over the last 40 years. So based on that subject, you may be inclined to think that we're not going to get any huge policy comments from him, but it's a risk either way. He may well drop some lines in there. I don't expect to hear any changes. It's given what we've heard recently and from the FOMC that they're going to plow on. So I wouldn't expect to hear anything different from Powell, if at all. And just to add an aside to that, BOC Deputy Governor Caroline Rogers is also speaking at that event as well. on economic policy. What can happen, as we've just had a BOC without a presser, is you tend to find there's always an appearance by someone a day or two after, and it becomes a little bit of a monetary policy report on the last meeting. So if you're trading the CAD, just keep an eye on that one. That's due out at 15:40 GMT. She's supposed to be there. I did put a live link in the chat room in the newsroom earlier if you're interested in that one. But yeah, POW is a definite risk. Maybe a low risk, but a risk nonetheless. So that, I mean, that's my look at. You know, we've gone over the ranges for euro dollar. Another one I want to look at, and I'm a bit annoyed about this one, because euro sterling, we're up against the big old 87 level. Those who have been following this show for a while, or indeed in the chat room, know I've been pinging this level as the big one for months and months, and we're up here. If we didn't have the ECB, okay, you could question whether we're up here at all, but I would be looking at this for a short with potentially a stop reverse on a break, maybe above 87.20 somewhere. But relative 5 minutes before the ECB, I'm not inclined to touch it. But this, again, could be a deciding moment for this pair. If we do get a strong break on a hawkish ECB, it's going to ramp higher. If I want to trade it, and I've had longs before, and I prefer a long bias, I'm going to be looking potentially for an after event confirmation move. So maybe it rockets up to 87.40 odd. If I get signals that it's coming back down, testing 87 and hold it, that's going to be when I'm potentially going to jump into a long. But right now, 5 minutes before the ECB, I don't want to touch it, and I'm a bit gutted about that. But anyway, that's my view on that one. Kay, are you looking at anything in particular to trade on the ECB?
Yeah, I'm going to keep an eye on perhaps rather crosses than the euro dollar, waiting for waiting for the Powell as well. But because I think,
do you want to take it?
When he talks about the last 40 years of monetary policy, I reckon there's 5 minutes about 38 years of them, and then 35 minutes about the last 2 years of them.
Yeah, I reckon I could sum it up. The comment they got it wrong for 39.99% of those years.
Yeah, no,
you take the screen.
Yeah, I don't expect them to. I don't expect them to change anything at all. They are on the preset path, and if we look at the latest data, there is absolutely no reason to change. The only thing we may argue is those S&P Global PMI showing a little bit of weakness, but then the ISM killed that one, and then we had a better labor report out. The unemployment rate went up from 3.5% to 3.7%, but then the participation rate also killed the negativity on that side, and we are still well below 4%. So don't change a winning team, in my opinion, on the Fed. So why am I looking at this one? It's ECB day. Now, just a quick one. I've killed a few of those of the indicators and things, but we can see we have this what we're talking about. We had this 1.618 at 144.94. There were other harmonics targeting those levels, and there was a bit of nervosity as well as we approached the level. And then when the US yield started to turn around, dollar yen was clearly out of sync with oil and yields when we were up there. So we had this 120, 130 points correction, and then the rest is MOF, BOJ, FSA comments keeping us now on our toes. And what I was saying in the room this morning, I'm expecting now that we are going not to see those 200-300 points moves anymore in one go. Of course, never say never. Famous last words. The next move is 500 points. but I'd expect right now that we may get into slightly smaller ranges. That is also depending on the US yields, but I don't see many reasons for US yields to take a fresh direction right here and now. So I expect those ranges to tighten up a little bit. Somewhere around high 142s could be good enough for now. If not, somewhere around 140, 180. And then on the top side, of course, there's a few minor levels now in between, which is around 144.40 before we talk about 145 again. But as I was saying, I mean, I'd be a bit careful now if the market starts to really test them above 145 in a big fashion. I saw a comment earlier by Jane. Thank you. Yes, you're absolutely right in pointing that out. 147, 148 was the last time Japan reacted. That was back in 1998. And it was a different time because we had MOF Mr. Yen at the MOF Sakakibara, who was very vocal about his 125, 145 dollar yen. He always said dollar yen should be in a range of 125, 145, and then he went above and he put money where his mouth was and gave the order to the Bank of Japan to intervene, because dollar yen was that is a similarity with today as well. Dollar yen was going on its own together with other dollar Asia in those days, because dollar Malaysian ringgit and stuff was absolutely flying in those days. And then afterwards he got unwanted help from the LTCM debacle, and they had to close all their positions, and that sent dollar yen down from 133 to 111 in 2 sessions, and then they had to already step in to intervene on the other side. Okay, but so I expect a little bit tighter ranges. I've also seen this question about the euro yen. We are back at this triple top. It is important. Yeah, we've tested it again. It's going to be an important level to watch after the ECB. Not only because of the yen weakness then, but obviously what Lagarde may have to say, and what the statement may be if they go for a hawkish one. Above there, if it would break, I've got 145.75, and then we are starting to look at lofty levels if they would go. Then we are talking about 147, and why not closer back to 150. The long-term trend in yen, dare I say, has not really changed yet. We're only a big figure in dollar yen below the recent highs, and 30-40 points sub the euro yen high. So keep a very, very close eye on this 144.30 post ECB. Watch out for saloon doors if we get a reaction on the statement, and then Lagarde, as she has already done many times, sends the euro the other way around. So watch for failures. I'd say the first really failure level is not before 142.40. It's also a double top prior from July and early July. So I'd say watch 142.40. If it goes back down there and it stays below, that may mean the party for the euro is over for now. So that about the euro yen. As you know, I'm a keen watcher of this euro Canada, especially with the moves that we have seen lately on oil and energy. So we are on a bit of a retest here of this 131.40. I said yesterday I wouldn't be surprised if the euro crosses tick up a bit ahead of the ECB. Well, that's what they do. I think the more important resistance would be in the 131.60s. It's only 30 points away, so that's a bit close for comfort, likely. But as we have seen those levels cap in the past, I would really keep an eye on what happens around 131.65-ish, whether it stays above or moves back below. If we stay above, then we have a chance to get back to 132.5, I would say. if in turn the ECB tells us it's not time to buy euros yet, the first level pretty close is 130.90. Then we have a 130.60, but the big one will be around 130 again. If this goes this time, I think it may not be as friendly as these bounces that we have seen lately. Another one is the Euro Aussie, and the Euro Aussie I'm a little bit in doubt here. I might steer away from it because I didn't particularly like Lowe's comments overnight. He did mention that QT is not yet part of the plans, that they will only move the cash rate. But we have seen very clearly that lately, if you don't do much more than moving cash rates, the market is not always reacting to it. Euro really has to be, the ECB has to be dovish for me to get back down to 145.80, and it's always possible, of course. But let's assume for 1 second that ECB would be hawkish, together with what's happening on the Aussie. We are not far from the 67, the figure level in the Aussie. 67.10 is support. If the ECB would go on a hawkish tilt, I would really not be surprised if this thing goes back up to the 200 DMA around 151.25 to 151.5. That's in case the ECB would turn hawkish. Really, and one that is worth keeping an eye on is this Euro Noki, because it's ECB day, and because we still have those sales by the Norges Bank, and oil and gas are moving lower. Brent broke through support as well yesterday, so we are now gradually moving back up to this 10.06 level. I've got some levels here around 10.10, 10.11 on the Euro Noki. Watch out for that one post ECB. I don't have anything in it right now, but I'm keeping a very close tabs on what's happening in it. And this one as well is starting to look as if it wants to hold levels, and the closest one here is 993. I'd watch really closely the 990, 993 with a protection net, if we may say so, around 985. But seeing the dollar behavior, I think this level just may hold, and we get a push back up. And the key would be if we break above 10.11, 10.14. So keep a close eye on that one. Yeah, dollar CNH, nothing changed. You've mentioned correctly that the PBOC has fixed again in the 691s. What is noteworthy though is that the models were calling for a much lower one. So the rate of defense that the PBOC had versus the estimate is a lot smaller today. It's only like 50 pips, where yesterday it was 500. So that tells me that they are probably okay with levels around probably around here, this 690, 691. I'm going to be very interested when it comes down there again. This is another one that I'm keeping a very close eye on. Euromex. I wouldn't like anything more than actually a mildly hawkish ECB to have a chance to see it back into this 2030, 2040 zone, because I still think the mix has a pretty good advantage on the carry side. But that's and it's not suffering that much when we consider oil and the commodities moves. But in turn, if we start to get back below those previous lows in the high 1970s, I think it's really bad news for this cross. So that's another one I'm going to keep a very close eye on. And then the euro sterling is really it's at a crucial level, as Ryan was saying. I have an interest in it, but only via options. I managed the option fully. I'm fully hedged, so to me now I'm not exposed anymore to the top side, but I'd like it to to stop around here somewhere and get a move back down to low to this support line. But ECB will be the decider. I don't know about you, Ryan, but then we had sell the rumor on the sterling into all the difficulties it has, of course, and into the trust. Then we had this reaction, a positive reaction or a position management after trust. Then we have this now, which we can call position management into the ECB. But it's a bit funny that we are on this crucial 87 level right going into the ECB. I'm a little bit worried about the sterling. The sterling side of things, I must say. What do you think?
Yeah, definitely. Yeah, definitely. I mean, there's a lot of stuff to come from Truss. You know, she's setting a cabinet out. You know, coming out with all these potential policies. You know, fracking is now back on the agenda. Extended licenses for North Sea drilling for gas and that sort of thing. So it could be seen in a positive light, and something that I've remarked on before, that we can move much faster on these sort of things than the Eurozone and things like that. And that's potentially good from an investor standpoint. You know, can the UK do something about it and do something fast? Potentially we can. How it all plays out, though, we need to get the full plan, which I think is coming today. And if the market likes it, I see no reason why it won't buy itself some pounds. But again, this is pretty much putting a plaster over the wound. It's not fixing anything for the long term. And that would be the counter argument I'd make about seeing the pound rising significantly on our plans. But yeah, it's big levels. I mean, euro dollar, we're at parity. I need to point out that the biggest expiry today is parity to 20, over 2 billion going off. So not a complete surprise to see us gyrating 10, 20 pips around parity at the moment. Obviously, that expiry is later today, but while we're waiting for Lagarde to turn up, that's likely to be the glue that's keeping us here as well. But yeah, you're banging what you say, Kay.
Okay, mate. Shall I give it back to you?
Yeah, can do. Let's have a look.
And ladies and gentlemen, I wish you a fruitful day, Ryan. Thanks, but I will need to hop right now. So have a great session.
Yeah, go, mate.
I will have to rename you host.
Okay. Oh yeah, do I need to?
Great day. Have a great day.
Yeah, don't shut us all off. Yeah, thanks for that, Gavin. I thought it was coming up today. We'll keep an eye on what Truss has to say and what the pound does on that. Just going back to a couple of other questions and items. But if I can, I'd like to ask a small favour. We've been doing this show now for a few weeks. We are looking to expand it. I'd like to get your views, if possible, and if I can be cheeky, if you like the show, just give us your thoughts that perhaps we can use as some copy for some testimonials. That would be much appreciated. I'm not going to go one way, though. If there are things about the show you don't like, let me know that as well, so we can look at those and make an effort to change what's perhaps not working. But if you're kind enough at some point, you know, today, tomorrow, whatever, to pop some of those in the chat function here, or you can get in contact us via various methods, that would be much appreciated. But anyway, back to a couple of the questions there. Nick Shah was saying a strong bounce in the euro this morning suggests leaks of 75 pips. I don't think so. I think we are just seeing a round of profit taking, squaring off of positions. Coming into the ECB, we have obviously had a wider dollar move, as we've been talking about, via dollar yen dropping, yields dropping, etc. So this move isn't really, I wouldn't put anything too much into this move. It could just be a simple case also of the euro dollar. We couldn't break that 99 for days. We had several attempts, you know, 10, 20, 30 pips under. And it's the old adage, what can't go down can only go up. But it's not really a surprise, as I say, that we're glued to the parity number, particularly with those large options expiring there. But leaks, I don't think that's the case, my friend. What else have we got here? Gavin, looking at the euro sterling, the spike, wants a spike through 87.20ish and reverse on ECB would be nice. Yeah, it's a tough one for me. You know, it's just generally my trading thoughts. Risk is a big part of my trading. It factors hugely, and I just can't trade it when we're this close to a big event, where the price can be 50, 100 pips flip flop in a flash. I have to take that into consideration. You know, I'd love to take a short with a stop reverse, but I could end up getting both blown on a big flip flop, and I just don't want to do that. So for me, you know, yeah, wait and see what happens after. Let's see what happens when the dust settles, and I can do that. And as you said, sensibly, you're going to be doing that as well. Let it play out for you. So look, you need to put the link to sign up for the show on your YouTube videos, by the way. Okay, Jane, I'll put that over to the devs. Just having a look, see what other questions we've got in there. I did see something. Where are we? Thanks, Bran. You'll be willing to make a testimonial. You're in our room, so if you want to ping that to me on the DMs, that will be much appreciated. And thank you, Sue, listening every night from the desert in Australia. We've got a couple of you guys in from Australia. Anne as well, she likes to burn the midnight candle, coming and watching the show, which is all much appreciated. Nut, if we see a top in US dollar, what do you think about shorting dollar Swiss, since US Swiss and GB Swiss are at these levels? Dollar Swiss, let's have a look at that. That to me looks like a chart that's very indecisive of what it wants to do right now. You know, fairly decent range. We're up and down. We are looking like we're channeling lower. Some might be pointing to a potential bull flag going on there. You know, if a dollar's going to retrace, yeah, this, you know, it's going to follow the same as euro dollar. Dollar Swiss is pretty much the anti-euro dollar pair. So yeah, that's going to head away lower. Will we potentially see some S&B action coming in if the moves there are that swift? I don't know. I think likely is that Euro Swiss is obviously going to rally in the case of dollar weakness, and I don't know if the dollar Swiss will react and head as low as perhaps other dollar pairs purely on that Euro Swiss basis. It's a much smaller dollar pair, the dollar Swiss. So I'm not, you know, you can look back here, you know, it sits in a very tight range, you know. Okay, 1,000 pips is plenty of playground to play around in, but we don't tend to go anywhere outside of that. You know, 1,000, we can do 1,000, 2,000 pips in euro dollar. We can go 2,000, 3,000 pips in dollar yen. You know, it's not a big deal in the bigger ranges. But this one, if you want something that's perhaps a lower volatility, then that's what you set yourself against. You know, it's pretty clear where the levels are there. You know, you're looking at up at the parity mark and you're looking down at the 9,000. If you get a move outside of those, that's what you want to go with. And until then, trade the range. Oh, for Pete's sake. Sorry, guys, I'm not even showing the bloody screen. Oh, dearie me. There you go. I'm asking for testimonials. Don't give me a bad one on that one, eh? So there we go. There's the Euro Swiss chart. Again, just pointing out, you know, look at the range that it sits in, going back years. It doesn't do an awful lot. It's pretty much at the mercy of the majors and the main pair, Euro Swiss. That pulls and pushes it around. So volatility wise, it's a low vol pair to trade mostly. It can have its moments, of course, but the levels are pretty clear there. Parity down to 90 is the range you want to look at. Pick your levels and ranges in between, you know, somewhere down at 91s. And then we're looking at somewhere up at, you know, into 99s. So yeah, that's my view on Euro Swiss. Sorry, dollar Swiss. God, it's all going wrong now. That's what happens. I've lost K and it's all going to pieces. Anyway, right, any other questions there quickly, and then I'll let you guys and girls go, because I know you have got a big day ahead of you and you want to get planning for the ECB. Thank you very much for those who have dropped some comments in the chat there. Very kind of you. Thank you very much for that. Do your testament chat on here. Yeah, that'd be great, Andrew, if you want to do that, or if you want to send it to us any other methods via the contact page on the website. What I will do quickly, and give you a little hint here, because there is potentially that there's going to be some price hikes coming into the ForexAnalytix platform. Just purely, much like everything else, our costs are rising, development costs are rising. What we don't want to do, though, is hit you folks with huge price rises, but it is being discussed at the moment. If you want to take advantage of the pricing at the moment, you can do so and get an additional 20% off the ForexAnalytix pricing by going from that link I've put in the chat function there. That will get you 20% off for the lifetime, or as long as you subscribe for. But we will be having more details on that price rising there. But today's days that are good to get in to a community like ours, bat around what's going on, talk about the aftermath, get a clear indication of what to do and how to assess it. But anyway, thank you very much, everyone, for coming to the show as usual. Please trade safe over the ECB. If you're not sure, stay out. I want to hear some good success stories tomorrow. I don't want to hear any horror stories. Thank you very much, and we shall see you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.